All right. Welcome in, everyone. Welcome in. So happy to be here with you. We have my undisputed favorite guest of all time, Tom Sosnoff, who I've learned more about options trading than anyone else. And I'm really excited to have you here, Tom. And I'm going to start. It's funny because I just said hello a couple minutes before the call started, but I had a question, but I waited to ask it until we got on. So I was listening to your Truth or Skepticism podcast.
Okay.
And you said brain trading increases brain processing speed.
Yes.
Just is that along the lines of positive drift or a little different? Can you expand on it?
Yes, I can, but it's nothing to do with positive drift.
Okay.
So years ago, I got really interested in why is someone like why is a certain athlete better than another athlete with very similar skills? Why are some traders better than other traders? What's going on? There has to be something there. So I spent a lot of time researching, and I actually tried to make some investments, but I couldn't find the right company, and I couldn't find the right, I was looking at a lot of these, Neuralink companies and just things just to learn more about it, because I'm not really, I'm not very well versed, and I'm not a scientist by any stretch. And so I started to talk to a bunch of people, and mostly in sports at first, and then moved into trading, about just how much better we get at making decisions and being able to, in our heads, do probabilistic math virtually instantaneously when we make a lot of decisions. So the process of decision making is like everything else. The more you do it, the quicker you become at it. And then there was this really interesting University of Chicago study on what they call economic bias. And the study, what it looked at, and you're going to kick out of this, what it looked at was people that make 10 or more transactions on eBay, mostly like sneakers and other things like that, are much better at making decisions much quicker than anybody else, almost like 10 to 100x. And when I saw that, and it was a really complex study, I was like, this is fascinating, because I've made, and you've made, 100 trades a day for 40 years, maybe more. I don't even know how many things. So my decision making is like, people go, they always say to me, don't you want to think about it? I'm like, no. You're in 1 second, and it drives me crazy when people sit there and they try to think things through and overthink things. And I've noticed throughout my lifetime that people who are very successful make very fast decisions. And so what I find with trading is that we have very few opportunities in our life, most people do, to make decisions that have both an emotional and a monetary outcome. And trading has both of those. And so I found that people that make a lot of trades are generally more successful in everything that they do. And that's it. So what happens is brain processing speed. It's one of the reasons that Tom Brady hung around for, till he's 45 years old. It's one of the reasons that Aaron Rodgers is still in the league. They just see things faster than anybody else.
So what's the difference between that and positive drift?
Positive drift is you don't need any kind of, you could be brain dead. Positive drift just means the market goes higher over time, or that you get better at things over time.
I thought positive drift. Sorry, this is important because I want to make sure I understand this right. I thought positive drift was the act of making a lot of decisions.
No,
a lot of little decisions every day, like staying involved.
No, that is called law of large numbers. That's different. That is the law of large numbers. If you want to make a lot of small decisions, then you're going to get closer to whatever your expected outcome is. But positive drift is, with respect to markets, all it means is that because you are participating in the markets and you're taking risk, that you deserve to make more money than risk-free rates. So if risk-free rates are 5%, then positive drift has to be higher than that. Otherwise, it makes no sense for you to take risk in the market. So all that positive drift has meant is that if people are invested in the stock market over long periods of time, they are going to outperform risk-free rates because they took more risk. And I believe you take it a step further, and life is about positive drift. So if you keep learning throughout your life, you're going to constantly get better at everything you do. And to me, life has a certain form of positive drift. Positive people have positive drift.
I refer to positive drift a lot. In fact, it was my birthday on Sunday, and someone wrote me a message saying, "May you have a year of wonderful positive drift," because they know how often I talk about it now.
Yeah, but that's the right thing to say, because they want you to get better. They want you to, you need to get better over time, and that is very fair. That is what positive drift is. But it's it has to do with just, if you take risk, you deserve to have better outcomes.
But trading makes your brain processing speed faster in that you're making decisions quickly and doing calculations quickly.
And you think of things like strategically and probabilistically, very different than other people do. Like, a lot of people have to think through things. And, if you sell a junkie out of the money call, or, you buy a junkie out of the money put, you don't have to sit there and go, I wonder what my chance of making money on. If you sell a junkie out of the money call, your chance of making money are very high. And if you buy a junkie out of the money put, your chance of making money are very low. And you can put a probability around it instantaneously. You don't have to figure it out. Like, your mind is already there.
So along those lines, and I'm not a doctor, and to my knowledge, you're not a doctor either, but some very close friends were talking to me about the benefits of creatine. And creatine, for me, I had always associated with as being like what the football players in high school did to get stronger. But now I've been hearing that it's really good, not just for strength, but brain also.
Yeah.
And I've been taking 5 milligrams, like naked creatine powder, in my drink for the last 2 months. And I truly believe there's something to it. I just want to say, I feel sharper, and maybe it's a placebo effect, which I'll take. But you're not supposed to take it if you have kidney issues or something. But just want to put it out there that I have been working on my brain, and I used to think creatine was weights, but now, have you ever looked into that? Or
I have not. Okay. But I've heard people say the same thing as you just said, but I have not looked into it.
So I noticed for me is, whereas in the past there might be a word or a memory that was on the tip of my tongue, and the recall took a little bit, where I was like, what was that? And now I feel like that wall is down, and there's no pause in it. I don't know. Maybe it's in my head, but I've been feeling really good.
That's good. All right, cool. That's awesome.
So for everyone here, first of all, everyone say hello. We like to chat. I know there's a good crowd today. Tom, your team is here as usual.
Yeah, Britt's on, and Quentin's on. So Q is on answering. He's on our trade desk, and he can answer any question related to Tasty. And then Britt's on. She can answer any other questions, related to me or Tasty or anything like that.
Okay, and so we're gonna cover a lot of things regarding options trading. But if there are things that you want us to try to cover as well, that's the benefit of being here live versus watching a replay. So if we're talking and you have a question and you want to ask, it's very friendly in that sense, and send it our way. We're gonna get into overall, market strategy a little bit, and then also, the best kind of trades. So today's a very interesting day. Tomorrow is the Fed announcement. Now, I don't really consider the Fed announcement itself to be meaningful, but I always view it as kind of like a starting gun for people to move their pieces. Now, we've been positive drifting up in the market ever since they indicated this rate cut that's going to happen tomorrow. It's like 99%, quarter basis point. And then they're going to have the movement afterwards based on what Powell says. But really, the market's going to move. The market typically will move tomorrow starting at 2:00. Do you agree with that?
Sure. The expected move tomorrow is almost three times what it was today.
And probably the best thing to do is nothing, unless you're advanced, I would say, for those couple hours. I love trading post-Fed announcement, but are you active then? Are you like doing a show, or will you come on and look to get involved, or?
So I usually am, but tomorrow at 1:00, that's when I do my podcast with Dylan. It's my Truth or Skepticism podcast. So, when we originally started doing this 10 years ago, the podcast, I never thought, we always did it Wednesdays at 1 p.m. Central Time. And I never realized at first that was when the Fed came out.
Right.
So I have been tortured by that decision for 10 years. I still manage to trade and puts things on. And usually, I can't say it's been good or bad. I think I kind of fall somewhere in between. I usually get, the Fed numbers are kind of tough. It's easy to get tripped up.
Would you typically, like, let's say the market shot higher post announcement?
Yeah.
Would you be a seller of premium?
Oh, yeah. I'd be a seller on if it shoots up. I'm not sure if I'm going to be a buyer if it goes down.
You're not a buyer, meaning you wouldn't sell puts either if it went down.
I might, but I kind of like to wait for this. What I found with Fed, we've done a lot of research on Fed announcements just because it's interesting stuff to research. And it's one of the few binary events that has a lot of mean reversion characteristics to it. Nothing else really price-wise is mean reverting, but for some reason, Fed announcements tend to reverse after 24, 48 hours, at least partial or all the way. So, there's usually not too much follow through.
Okay. Again, related to the market, as we sit at all-time highs, one of my financial managers today called me to let me know how well he's been doing for me, and I was like, "Congrats, buddy! Like I give you no credit, like the only thing you do that I don't is you have the discipline to just sit there and not move. And congrats, and I'm glad you're doing well."
Hey, I was doing a talk the other day. I was actually in New York last week, and I had to give a talk, and everybody was like over the top bullish. This stock's going from $10 to 200. Like these ridiculous. Bitcoin's going to 1 million. All this stuff. And when it was my turn to talk, I think I was the third or fourth speaker. One of the first things I said was, "Bull markets make geniuses out of a lot of people."
Right.
And I'm not ready to buy into that, into those genius talks yet, by any stretch.
No, I completely agree. But the market is where the market is. Volatility is really low. I mean, the one study that would be hard for you to do, but you should, is the impact on your talks with me and this audience and my trading performance, especially for the group, because I've learned so much. And so I put these trades on that. My biggest problem now is probably when I have something that I've sold premium against and maybe it gets overrun, so we have less of a profit. But using the characteristics of delta and understanding time as it relates to options and the importance of premium collection and defending trades has made me so comfortable with the market. And even with the events now, because we have premium collection as a part of almost all our trades, these announcements become less scary. An announcement like tomorrow means that if we sold premium against it, if the market runs up, that premium will go down. If it's a put. So it's, my dog is just screaming. Someone was at my door, and I heard the dog screaming. I don't know if you guys could hear it, but sorry. So yeah, I think we've learned a lot. Is that still the play right now?
The way I would describe it's a little bit different, but what I would say is that you've gone from a defensive, let's say, fear approach to an offense to where you look at it offensively, and it's all about opportunity now. And that is a very typical, active trader approach. Back in the days, when we were on the trading floor, all we cared about was noise. So if there was no noise coming from the pits, there was nothing to do. Like if
Right.
there's no noise, you knew it was like watching paint dry. But if there was a lot of screaming and yelling, you wanted to know what was going on, and then you had to get down there.
Yeah. Yeah.
That's all it is. We're attracted to noise. We're attracted to chaos, and that's kind of a good thing from a trader. That's an opportunistic way to look at trading.
Well, something I touched on with you once that we probably should look into it more, but I just want to bring it up again because I've been thinking about it more and more. Is there's a significantly less number of total stocks to be traded right now, especially on the major exchanges, right? And we had looked. It used to be like over 9,000. Now it's probably closer to 3,000. Does those numbers sound right?
I mean, the total numbers. Yeah, I think. Yeah, I mean, I think the actual numbers a little higher, but I think that of tradable stocks, I mean, it's always been kind of like 200 or 300. That's it.
200 or 300. Like when you're looking at a day where you expect the market to move, like tomorrow, you're looking more at the futures and indexes than individual stocks, or you look at individual stocks, or both?
I look at kind of both. I mean, the futures are what I default to, but I look at individual stocks. I mean, my individual stock positions are way bigger than my futures positions.
Okay, and those you don't have an opinion on for the most part, or you do? Is it
What,
more
individual
neutral? The
individual
individual
stocks?
stock? Yeah.
Oh no, I'm pretty opinionated. Like, I have a
Okay.
couple of shorts out there that have been kind of nipping at my butt, biting me in the ass a little bit the last 2 or 3 days. Not happy. Last week's been a tough one.
Because we just go straight up. So if you're selling,
Well, it's been tough for me because I got caught in that Oracle move, which was that Oracle earnings move.
you had a position on Intuit?
Yeah.
Really?
Yeah.
Oh my! Does everyone know you want to tell people? I mean, it's a good. I'm not trying to. I know you.
No, I'm happy.
I think it's good for people to learn. Let's
I'm
talk
very
about
open.
that. That's crazy.
So I usually play most of everything that's liquid, kind of for earnings. I usually play, and since I'm a premium seller, I like to go out a little over 2 times the expected move. So I like to go that's basically 2 standard deviations. So, and I feel pretty comfortable there. So Oracle, the expected move was about $23, and the actual move was almost 100 when it, at the top. And so it was a 4 standard deviation move and most of the time, 2 standard deviations or 2 times the expected move gets you, plenty of breathing room. And this time, I was short some calls and puts at 2 times the expected move. So I was short about $45 to $50 away from the closing price. And we opened, we opened up about a little less than 3 standard deviations and went up to 4. It was kind of ugly. So yeah, that was a bad one. That was the worst of the year.
So what did you do in that? I mean, at that point, did you?
I sold puts. I sold at the money puts and got back a little bit of money and then closed the position the next day. And it was a decent sized loss. Sometimes you just got to take the loss.
But it came down the next day a little bit, right?
It did. It dropped all the way back down to 2 times the expected move. It dropped down to under 295 from 345. But at that point, a lot of the damage was already done because you can't hold it. That's impossible.
Right. Okay. So does everyone understand that?
That was not a fun day. And so, I followed that up with some, how it is when you make a bad trade. Sometimes you get then you make a spite trade,
yeah.
And then you have to take a step back and you're like, I've only been doing that for 4 decades. So, occasionally, even the best of us, it happens.
And now when you go home that day, would anyone know that happened or no?
No, only only Tony bitching, if you've been married to somebody for a long time and you've basically been going home every day for your entire life saying you got killed because that's just how we talk, then she hasn't listened to me in 25 years.
Right.
She doesn't care.
But you won't be in a bad mood, right?
Oh, no. Now, I won't be in a bad mood. I'm in a bad mood when it happens, but then, it's how, it's life, man. I've been doing this for a long time. That's just had a lot of bad days, had a lot of good days.
But don't you think a part of that is because even though it was a big loss, the amount you put onto the trade is probably on par with all the other trades you would make versus
Sure.
it wasn't something where you're like, this is the one and you got
Oh,
overlooked.
no.
But
I've been at odds with Oracle for since 1999. They were the first database we ever used where we built software, and I've been buying Oracle database software since 1999, and I've been fighting with them over fees and costs and negotiating with them, and I have so many good Oracle stories. I could probably write a book on negotiating deals with Oracle, and so they're not my favorite company. I'll just leave it there.
okay. Steve said, I don't want to be a seller tomorrow, but what about putting on a strangle? Any study on that idea?
I mean, yeah. When you say putting on a strangle, I assume he means selling a strangle. I mean, so Steve. Yeah, sure, of course. I mean, that's how we're going to trade it. Short both sides, but with a little bit of downside delta. I mean, sure. Just pick your. Just know that tomorrow the expected move is about $45. You want to be outside of that.
Jim said in Atlanta, I bought Tesla puts on the way up yesterday and took a big loss by the end of the day when I shut it down. I share Tom's pain, also on the wrong side of PSTG with puts that expire Friday.
I don't know what PSTG is.
Sure Storage. I just looked it up. I don't know. It looks like it's pretty actively traded.
I mean, if I was going to trade SPY, so you can see, well, I mean, you guys do a lot of, let's just take a look. So the expected move in SPY tomorrow is 424. That's in SPY. But if you went out to October, the expected move is $20. So if I was doing an October strangle, I'd be outside of $20. If I was doing a 1 day or a 1 day, I'd be outside of $5. And if I was doing a 7 day, which is right here, I would be outside of $9.
So how would you set that up? Can we see what that would look like? And we're not advocating for this.
No, I understand. But what date are you asking for?
7 days out.
So 7 days out. So you go to right here, you go to 7 days, right? September 23rd. That's 7 days. And you can see the expected move is right where my cursor is. It's 873. So I would go $10 out. So the index is let's call it 660. So I would sell the 650 and the 670. So right here. I mean, that's the expected move sale. You notice how the puts are twice as expensive as the calls, but that's the expected move outside the expected move for September, 7 days out. Collect 274. I mean, it's basically a 1%er, I mean, it's a different, well, whatever. You can see what you're collecting 274. This is a 5. Let's just default to 1. So on one contract, $600 index, it'd be about $10,000 in capital to make, maybe 50% of this. But you can see the numbers here. The P50, which is the chance of making 50%, 82%. I mean, that's just a high probability trade. I don't know. That's where I would start. You can adjust. You can move the puts down a couple more. You can move the calls up 1 if you want to be, or 2 if you want to be a little more bearish. That's all. You just play with the strikes.
So does so the same companies could be in the SPY and the Qs?
Not really. I mean,
Wow.
Yeah, they could, but they could. There's a few that are the same.
Like
Same
Apple, Nvidia, Microsoft.
Yep.
Right?
Yep.
So they influence both. So they're just different in the rest of them.
They have different weightings. Sure. They're
Okay.
much bigger weightings in the NASDAQ than they are in the S&Ps. I mean, those stocks are also in the Dow, so sure.
Right. So they all technically. So it's weird when you have a day where one's down the other. It has to be the other things, though. I was just looking at the. Right. So trading the Qs versus S&P 500. What's one versus the other?
Well, I mean, it's just which one do you think is more overbought? That's really, that's what we call. There's a term for that trade. It's a pairs trade, but it's called a basis arb. So what you're betting on is the spread between the two, not the actual index. So if you bought, let's say, the S&Ps and sold NASDAQ, you're betting that spread goes whichever way, goes the way you want it to go.
So if you were going long Russell and short NASDAQ, it would have been a bad couple of years for you.
Yes, it would have been a bad couple of years.
Right.
I actually like that trade for tomorrow. I like long Russell, short NASDAQ for tomorrow. I haven't done it yet.
It's interesting. I brought up, I think it was on the last call we did, I brought up a company, Resolve, and I said the reason I was looking at it was because it was added.
What's the symbol?
You're not going to like it. RZLV. I brought it up just because it was I was trading it at $2 and $3. Look at the chart on it over the last week or two. But it got added to the Russell. And then it felt like anytime someone was buying, like anytime the Russell went up, this stock now had to be bought. It just seemed like a natural cushion. And we traded it. We just kept selling puts in it at $2.50 and $3 and $3.50. And it was like you were selling 40 cents worth of premium on a $2.50 stock that was added to the Russell. So it seemed like a no-brainer. And it turns out it was, but now it just ran 6 points. So that trade's over. But yeah, I looked at that. I was like, this is part of the Russell. So anytime someone buys a Russell, this means they have to buy that, right?
Yeah.
That's how it works.
Yeah.
And it's trading at $2.50. And they were selling premium for 40 cents. So I was like, I'll just keep hitting it. And we were selling them every month. But now it's over.
That's just the premium is so high because the calls were so high. That's why the puts were expensive.
It was great though.
Yeah. When calls are expensive, puts are expensive, and when puts are expensive, calls are expensive. Like you can't have expensive calls without expensive puts, or vice versa. Volatility impacts both sides.
Yeah. What are you looking at now in terms of your focus, or just in overall market?
My positions are pretty small right now because the market I don't feel like there's a lot of stuff that's cheap. And I feel like there's a lot of stuff that's expensive, but I'm not getting paid by being short anything. So it hasn't been like, it just hasn't been a good trade to be short. I am a little short a couple of stocks. Like I'm short Meta, I'm short Reddit, I'm short Roblox, and I'm short some S&Ps.
When you're putting on those trades, like when you were talking about the S&P, like doing a strangle, okay?
Yeah.
For the audience that most of them, I would guess, have smaller accounts, like sub $50,000.
Okay.
I don't know what the tasty overall average is, but
I mean, 50,000 is like 40 to 50,000 is the average kind of retail account throughout the entire industry. That's pretty 40. I think it's like 42,000 or something like that. So
if you're doing something like that and you want to put this trade on and you want to add, turn it into a spread, right? So is it still called a strangle if you buy protection on both sides?
No, then it's called an iron condor.
Yeah. Okay. So that's the only difference between the strangle and an iron condor is the iron condor offers protection.
The iron condor has wings.
Okay, there we go. Okay.
It's like Red Bull has wings. The iron condor, you own the wings. Yes, that's it.
So you would suggest to go as far out, spread that out as far as people are comfortable, because the greater the spread on the wings, the higher the chance of success.
Well, yeah, of course. And you can adjust it. Like the beautiful thing about trading nowadays is that you're trading against the computer. So it's like, it doesn't matter what strikes you pick, anything, nobody cares. So all you're focused on is like, where is your comfort zone? I start at the expected move and then I adjust accordingly. And you can adjust, like if you just pick just some random strikes, it doesn't make any difference to sell. Let's just say you're selling this strangle. Okay. These are your random strikes that you select, but let me just tighten them up a little so they could fit let's fit these on the screen. Just so I could fit stuff on the screen. Hold on. So you guys can see it. So let's just pick some random strikes. Now, if you wanted to make this a little bit more bearish, you just roll this up. And if you want to make it a little more bullish, you just roll the puts up. But if you want this kind of trade, you want to define your risk, you just pick a strike anywhere. It doesn't really, you can make them as wide or as narrow as you want, and you can adjust it to anything that you want. It doesn't have to be, everything is configurable. The platform doesn't know anything. Like it doesn't sit there and go, oh, this thing is unbalanced, or this thing is, you're off by a strike or something. It doesn't know anything. So it lets you do whatever you want to do, quantity wise and strike wise. So yeah, this is a defined risk trade. So you go from a short strangle to a defined risk trade. That's it.
For the audience, if you're putting on a trade where you're selling premium, are you more likely to do it as a spread, or are you more likely to do it naked? Just want to get a feel for everyone.
I am more likely to do it naked.
No, I know you are. Sorry. I was actually asking the audience to chat in, because I want to cater more to them when we talk about it. And I'm just curious what they want, what they do. I like to know, like, because maybe I'm wrong. Maybe a lot of them just sell naked premium. Especially if you're willing to own. I mean, you don't do it with the intention of owning the stock. There's never a time where you're like, all right, I'm going to be short Oracle right now, and then I'm going to sell puts underneath it, right?
I mean,
is there ever that a consideration? Like, well, okay, I sold these calls, so now I would be short 1,000 shares. Say it's 1,000 shares, so now you're short. You'd be down 100 grand, on the open, less the premium you collected on both sides of the trade, and then saying, now I'm going to start selling 250 puts underneath every month until it,
I mean, you certainly could. We have a rule.
Okay.
And it's our own personal rule. Scott and I have lived by this rule for decades. When we have a bad trade, we don't like to add, we'll do anything we can to adjust that trade, to increase our credit, to reduce our risk, but we don't like to add new money to a bad trade. So we're unlikely to sell, a crap load of puts. We would sell a put for every call we're short, but we're unlikely to sell more puts because we've already been burnt by the stock. Now we don't want to get double whammied.
No, I agree with that. So I'm just going to read these. Matt, my hat, I got it as a gift. Email me adam@adammesh.com, and I'll text the person who gave it to me, and I'll ask where they got it, and then I'll let you know. Thank you. Strangle, Andrew said. Snow said risk defined, small account. Deanna, sure. Naked if it's under 200. Ray, never naked. Dave, never naked. Risk always defined.
Okay.
No, can't not make the trade while naked. Naked means you're not buying protection. So you're selling a put or a call, collecting premium.
Yeah, the difference, let's understand the difference. The difference is that if you do something defined risk, you're going to have a much lower probability of profit than if you do it undefined. That's all it is. And you're going to have a higher return on capital and a lower probability of profit. That's all it is. It's not mathematically any riskier. It's not a worse trade or a better trade. It's not better or worse. It's easier to defend I think it's easier to defend a naked trade, but statistically, you're not better off by being naked. It's just you have a higher probability of profit. There's no theoretical advantage to being naked or defined.
And Jeremy, Tom just answered that in terms of why he prefers the naked trade, because there's a higher probability of success. And Deanna said easier to roll. It's true.
She's right on that too. Easier to adjust, easier to roll.
Yeah. Do you think, this is an interesting question, and you would know because I like asking you because you're not really an emotional answer. You're more of a mathematical answer.
Okay.
So it seems to me that the markets used to have more spurts of volatility, and that now, like what we had in February, March of this year, where we had that really big sell-off, which was exciting. That's the market I like to trade in, versus what we had after that. Am I wrong? Does it just seem like it happens less, but that's how it's always been? Or is it less? That's what I want to know. Is it my perception that there's less periods of volatility, or is it a reality?
You are having what we call an AI hallucination right now, Adam.
Really?
Yes. There is, what I will say that's interesting is that the last 5 years, from 2020, when we had the pandemic, to 2025, the volatility has actually been very heightened compared to historical
Really?
average. Yes.
That's so crazy.
It's like 25% higher than it's been historically for the last 5 years. So the fact that it's kind of normalizing right now is just freaking people out because nothing's going on.
So there will be volatility again.
Okay, I'm going to tell you a story from like years ago when we built Thinkorswim. It was like 2000 and I think it was 2007, and volatility got down into the single digits. Like the VIX got down under 10. And this reporter who I knew from the Wall Street Journal, I had done a bunch of stories with him. He called me up and he said, "Do you think we'll ever see 12 again in volatility?" Because it got to 9. And I'm like, dude, like we're gonna see crazy spikes in volatility. You just have to wait it out. And it was another year before the meltdown in 2008 when volatility went to 85.
Did you ever follow up with him? Be like, how's that 12?
I didn't know. I didn't have to. but I'm just saying, like he actually called to write an article. Will we ever see 12 again? And I was like, come on, markets are cyclical. Crap moves. There's nothing you can do.
Stocks, companies that buy their own stock when profitable. Do you do anything on that? Do you study that at all? Where companies?
Yeah. I mean, first of all, almost every company now buys their own stock because when you're flush with cash, you have basically 3 choices. And since I've run a public company before, these are your choices. You can buy another company, which sometimes always isn't the most interesting thing or the most you don't want to overpay for some other company, so you rule that out. You can pay a dividend back to your shareholders. That's your second choice. You can pay a special cash dividend, or you can buy your own stock back and reduce your float and put some upward pressure on your stock. And that's why most companies do it.
And do you lean bullish on companies that are doing that?
Well, every company does that now. I mean, it would be.
I'm talking about like Dropbox. Like Dropbox is eating its stock to the point where in 5 years, if they continue to do it, there won't be any stock available. Something like that.
Oh man, I haven't traded. Where does Dropbox trade now? I haven't looked at it in years.
32. Do me a favor. Take a look at the amount of stock they're buying back. Someone pointed this out to me who's very smart.
What is the symbol again? Is it Dropbox?
Yes.
Oh man, I have not looked at this stock in, I swear, at least 5 years.
It's not that exciting to trade. We've been selling premium in it successfully underneath with a willingness to own. But there was
what's the symbol?
DBX.
Oh, DBX.
Delta Bravo X-ray.
I've typed in drop. Got it. Oh, wow. Yeah. Okay.
Here. So this is one of the articles. This was from September 9th. Dropbox amends secured credit agreement, announces additional $1.5 billion stock repurchase program. And they just keep doing it.
Yeah. Well, I mean, IBM bought their own stock back for 40 years and it never had an uptick until this year. So it's hard to say.
That's okay. That's good. That's a good counterpoint. That's what I was going to ask about. So the other side of that is not really the other side, is unrelated. We've had negative conversations about micro strategies and the whole concept of it. And I lean on your side. And when I do interviews with people and they ask me my biggest risk to the market, I don't think it's happening anytime soon. But I think the thing that would cause the next financial crisis would be a crypto collapse. That's my opinion.
I think that micro strategies has the potential to implode more so than any other stock that I could think of. And for that reason, I agree with you.
But now we see so many other companies mimicking that strategy.
Sure.
and TV personalities coming on, and and is that just because it's easy money for them?
I mean, think back to 2021, Adam, when we had all these SPACs, and all these SPACs were doing was, they were all raising all this crazy amount of money, and everybody thought, well, these stocks must be good because everyone can raise all this money, and then they all basically went belly up, every single one. So it doesn't, just because a lot of people do something doesn't mean, there's a lot of people out there that follow other people or ideas into the sewer. So,
Abigail, I'm going to go to your question next. And I just want to put something up before we do. So Abigail, you didn't expound upon it, but I like what you said, need knowledge, and there's a lot of comments in there, but I'm going to go over a checklist for you in a second. But Patrick, do me a favor, put up a link for Tasty Trade, because this is the best. I'm obviously biased, but this is the best trading platform, the fastest. It's awesome. And as we go through this, it's easiest to do what we're talking about when you're on this platform. So please check it out. That would be good. Patrick, you can provide a link. Now, for Abigail, when Tom, for newbies, when they're looking to put on a trade, let's say a credit spread trade, and I ask you this a lot, but as my golf pro said to me, the most success happens when people can constantly work on improving the same thing, getting better at something. So the base of a trade, you start by looking at the market, whether the market's up or down, to determine whether you want to put on a credit spread, bullish, bearish. Like, what's your go-to, starting from the overall macro into the delta and time and everything like that?
So I don't necessarily have an overall macro view. I do have a very opinionated, personal view of different stocks based on the moves that they've had. Like I'm getting a little short Reddit here, RDDT, because the stocks had a monster move to the upside. I have no macro or micro opinion, or I have no opinion on Reddit as a company whatsoever. I just think based on price, I get a little, I think it's a little rich.
Sorry, when I say macro, I mean more like there's a Fed announcement tomorrow, so maybe we'll wait, or.
Oh, okay, I call that more of a
overall. Yeah,
that's more of a binary thing to me. The Fed announcement is a binary event. That would not stop me from getting short or long a stock that I like. That the fact that there's a binary event would not impact that very much at all to me. It might change the way I trade bonds, or it might change the way I trade S&Ps tonight or tomorrow, or NASDAQ, but it wouldn't change the way I trade Apple or
Reddit. Okay, so now you're putting on your Reddit trade. Go ahead. Sorry, I didn't interrupt.
No, that's what I'm saying. So then it just depends on what side of the market. Like if I want to be short Reddit, I mean, the markets in there are not that great. So you kind of have to do spreads, and I like to sell call spreads. So that's kind of my favorite way to trade Reddit. And, sometimes I short a little stock, but my preference is to sell call spreads.
So you're going to do call spreads, and then what time frame?
Right now, October has 31 days, so I'm still doing October. But pretty soon, like the middle of next week, you can do November. But I stick to our mechanics, and over 30 days, I'm still doing October.
Okay, and then Delta.
So Delta, my favorite thing to do is to go to the expected move, and wherever the expected move is, that's my short strike. And then my long strike in there is going to be kind of wide because I like wide credit spreads. So maybe $10 to $15 wide. But my short strike is going to be right at the expected move or just inside of it.
So like if you bring up Reddit, RDDT, and you go out to October 17th, which is 31 days.
Oops.
And so you see that the expected move is $37. So if you're going above it, it would be 303. So then you would look and you would have like a choice between the 300, which is a 31 delta, or the 310, which is the 26 delta. Would you do the 26 delta at that point usually?
Okay, so I brought up Reddit on here, and I'd go to October, and the expected move in here is $37. So
Yeah.
the first thing I would do is the stock is, let's call it 265. So I would go to, my first thing would be to go right around the 305s. So
Yeah.
my choice would be 300 or 310. And since I'm a little bearish there, I'd go to 310s, which is just inside the expected move.
300, right?
300s. I'm sorry, 300s. And then the strike I would buy would be the 310s or the 320s. The 310s, the payout's $2, so it's about, that's 20% with the strikes, and the $20 wide one's almost, just a little under $4. So it's kind of the same thing. So either one of those two would be my trade.
By the way, did you see I said that all? Like, I know it. I'm conditioned to do. I know exactly how you trade.
Yeah, that's exactly how everybody should be. Like, it's like, it's almost like I love armchair quarterbacks when it comes to trading. Like, because that's the way, that's how one of the issues for me with self-directed retail traders trading options is that their initial move is not mechanically optimized. Like, they do a lot of things. If you just get people, if you put them in the right spot, it's almost like having your golf pro set you up with the right stance and the right club. Now you still have to make the swing. You still have to do everything, but at least, he or she puts you in the right spot and gives you the right club to hit.
Sorry, a Monday morning quarterback, if someone says that what you should have done. Armchair quarterback is, how do you define that?
That's when you're sitting in front of your TV set going, I would run the ball. And
You just do it. Okay.
You're calling the plays. Yeah.
Right, but you like it. You think everyone should do it the way the same way. There's only.
I don't think everyone should, but I think that people that subscribe to the stuff that we talk about, it's the most logical way. Like, what could be more logical than saying, what's the expected move in here? $40. Okay, I'll move $40 outside, and that's that means that 70% plus of the time, you can see right here, this trade, the pop is 76%. That's your probability of profit. And 83% is you're probably making half that. That's a good risk reward. That's not some arbitrary number that Tasty made up. That's actually that you could go to any firm in the world, they're going to get the exact same number because that's what the option market shows.
Jeremy said, is that because you trade longer term expirations so you don't let binary events impact the trades?
That's part of the reason. That's part of the reason. You need to sometimes, if you're going to trade a binary event like tomorrow and you want a short-term result, you're going to trade the 0 days or the 1 day. But if you want to just take the binary event kind of out of the equation, then sure, you go a little longer term.
And that Reddit trade, yes, was a bearish trade. So anytime you're selling calls, it's a bearish trade.
Sure.
How often does Tom hold his credit spreads to expiration? Never.
Zero.
I know that.
Zero.
Never. Versus cash out soon, assuming it's happening. So what we just did was and I knew it was zero. Yeah, I literally just trade like you. Is that an armchair quarterback? Am I an armchair?
No. Armchair quarterback just means, what I meant by that was that you were going to know exactly what I was going to do.
Yeah. Okay. Got it. Because I'm not even being difficult. I was like, armchair. Is that a
armchair
thing? I'm like, I didn't know. I hadn't heard that armchair.
Okay. All it means is that when you said to me, set up a credit spread, if you were sitting in front of watching my screen, you would go, he's going to sell the 300s, buy the 310s.
Right. Okay.
That's it.
Got it. Yeah. I'm calling out your plays because I know them, and you like that. Yes.
That's
Perfect.
right.
I got it.
So that's why like Brady and different ex-professional football players are in the booth.
Romo did a good job with that.
Yeah,
too.
Tony Romo does the same thing. So like the reason Tony Romo's in the booth is because he has a better idea of what the fans want to hear, what the next play is going to be, and he has a better idea of it than they do. That's all.
So we just did in Dropbox on September 11th. So you'll like this trade. Look at this trade. So we sold the 30.26 for October 17th for 55 cents. And then today we covered a third of the position for 23 cents. Now, the reason we didn't take it all off because we got a really good move down in a couple of days was because we want to own this. So we're willing to hold a little because we want to take ownership of some, but we also had to take a profit because we made 40 cents in a couple of days, which was good.
Sure.
But I feel like that's all textbook how you would do it. Like we went out the right number of days, right?
Well, the only difference between what you did and what I would do is I would have closed the whole thing.
You would have closed the whole thing, 100%. I even said the only reason we left some is because we're willing to own it.
No, I understand.
Yeah.
Right.
Okay. So a couple more questions. Of your trades, this is from Joe M. What percentage are credit spreads? None.
No, a lot.
Oh, really?
A lot of credit spreads. Yeah. I would say a lot, Joe. I would say it's next to naked options. It's probably my second biggest strategy. So I would say, 15, 20%. It's a lot.
How do you determine whether it's going to be naked or a credit spread?
Sometimes it depends on the liquidity in the stock. Sometimes it depends on the price of the stock. Like I don't like to tie up to, like if we're trading like a $500 stock, I don't like to waste, like let's say I was doing Meta. I don't like to waste all that capital. Just, I'd rather just spread it off and just, or we're trading SPX. I don't want to waste all that capital. So I'll spread it off for capital efficiency.
Okay. Tom, this is a little bit of a loaded question. I'm going to save it for a second. It's interesting.
You can ask anything. I don't care.
Well, this one's like, I don't know. It's all right. I'll ask it. Compared with Thinkorswim, what makes Tasty Trade stand out? Vivian wants to know. He invented both. That's why it's like a weird.
Yeah. So it's just, it was the same designer and a lot of the same developers. The difference is it's 18 or 18 years newer. And so it's just a lot faster and we cut out all the bloat. So it's just easier, like for rolling and for option trading, it's just easier. We've learned a lot. We built TOS in 1999, 2000. It was the best platform in the world for, almost 20 years. But Tasty's just, it's faster, it's less bloated, it's just easier to use. That's all.
Jim said, how do you determine your exit level for credit spreads? Is it mechanical or discretionary?
It's a little more discretionary, Jim, than most of the other ideas. But I would say that the 50% still kind of rules. If you make 50%, you kind of move on. And the other thing is it's a lot of it's by time. So once you get inside of 21 days, then we kind of do something with the credit spread. We either move it to the next month or we close it or something like that. So it's based on time and profits. So if you don't have any profits, then it's based on time. If you have profits, then you have to make a decision based on time.
Wendy, were you on the call earlier today? Was that you? I think it was Wendy. I think Wendy was on. We had a call this morning and we were talking about this call later today. And she said she's in the Women of Tasty Trade Facebook group.
Yeah. There's a couple of those.
There's like 600. There's like 600 members.
Yeah.
I was like, that's awesome. I'm like, send them the link for today. When did you send that link? Yeah, that was you. Did you put the link in the group? Did we invite I hope so. But that's pretty cool. I went on there and saw it. I didn't ask to join because I don't meet the criteria. With Fauzia Timberlake is the leader.
Yeah, Fauzia has been a friend of mine for almost 2 decades.
I thought that was really cool. I want to start. I want to start something like that. But men of Facebook, that's I need to think of something more original.
No, I don't think that's going to be as big a hit.
Yeah. It would need to be different criteria. Yeah. How often will Tom open a credit spread with same week expiration with the intention to let it expire worthless or close to worthless? If he does this, does he have a rule of thumb to determine how much credit he likes to collect versus the width of the spread?
It's pretty unlikely, but if I was to open, because I don't usually trade, like that's not the way I trade, but if I was, I'd be focused on, again, the same mechanical logic applies to try to make half. So if you open on Monday, you want to close on Wednesday. I rarely take things into the close. I mean, I would have to go back 25 years in my career to my floor trading days where we took everything into the close, but we don't do that anymore.
He said, perfect. Thank you. And then going back, I really like expounded upon Abigail's need knowledge. But Abigail, did we start to kind of hit you over with some knowledge? I hope so.
Good.
I like the audience energy. We had this good event last week, and I could tell there's a lot of people on here because the comments keep coming in and the questions. And that's what I know that's what you love, and that's what I love. I love a busy audience.
Of course.
Snow said, "How is Tom trading tomorrow's news?" Well, he's going to be doing his podcast at 1.
Don't worry, Snow. We'll have a lot of positions on, and I will be positioned for it. I'm kind of hoping, I'm a little bearish here, so I'm a little short some delta. So we'll see what happens.
By the way, I told you about some of my favorite stocks last time, and I gave you APLD, and it's been very good.
APLD, yes, you did. Yeah,
and
I didn't buy it.
It hit a new high again today. I was right on with that. SoFi was another one. It's called searching for the next Palantir or Hood. What we're doing. But Palantir was great, and so yeah, these stuff. But like I said, everything is working right now. So everyone's saying the target profit is around 50% for the credit spread.
Yeah, that's fair.
Flash says, "Will Tom tell us what he's trading so we can copy it?" No. Your APLD trade has run. Thanks, Jim. So how do you think about rolls? I haven't done many, and you mentioned that as a part of what you do with naked options.
It just means the term roll just means going from, like, for example, September to October, October to November. On Tasty, you do it with one click, so it's super simple, but that's all it is.
Okay.
A roll is just an extension. It's how you extend duration. So you're buying more time. That's all it is. You're reducing risk and buying time.
Wait, so Tom, are you going to be in New York this week?
Yeah, I'm being in New York. I'm getting to New York on Thursday. I have a couple of talks on Thursday, and then on Friday we're doing our show this Friday morning.
So I don't think I could go to the thing on Friday morning, but Thursday I'm going to be in the city. Do you know what time you're getting in?
No, let me. I'll text you.
Text me. Yeah, I'm actually, I have a cool day that day, and but if you're around, definitely come see you in the city.
Okay. Let me text you tonight. I'll text you.
And I only come to the city like 5 times a year now, so.
I was in New York last week, and I'm going to be in New York. We have our big show is Friday morning at Webster Hall, and anybody who wants to come is more than welcome. It's free, and then I'm going to do a bunch of podcasts and some TV hits on Thursday afternoon.
Which TV?
Not 100% sure yet. I think I'm doing Fox and maybe something else on CNBC. I'm not sure.
Dev said, "Do you do protective puts if your calls have run a lot? Buy puts to protect down and participate in upside?"
No.
Okay, there we go.
People do. That's just not my style.
We're about out of time for you, but I got to tell you, so I was listening to the podcast, and it really got me thinking, because I do think a lot about AI. So I'm sorry, but because I get to talk to you, I could chime in not just as a listener and respond to what I heard, which I want to do, because I have my kids are in school right now, and so it's interesting. Like my daughter was studying for an AP US History test, and I took her notes. And I put them into ChatGPT, and I said, create a standard AP US History test based on these notes. And it does it in a second, and you create your own practice test. Or I'll say, how does this apply to AP US History? And it will give you. And so, sure, maybe I think in that sense, instead of having to look it up and take a lot longer, I'm just getting smarter faster. And I'm moving on to more challenging problems. So it's kind of like the microwave. Like you could look back and say, oh, these kids will never learn how to heat their own food using a stove. But you don't have to, because you have the microwave. I don't know. Like in some sense, you get to bigger problems faster. Like I do think my kids are definitely smarter than me. And most kids are smarter than we were in that sense. Like, academically, but I know the math is down. So I know it's a whole other conversation, but sorry, I won't get you going but you can respond, please.
I just gave a speech in Mexico City about less than a month ago, 3 weeks ago, at a risk conference, and my whole talk was on the the upside of AI with respect to trading and risk management. And I gave 35 different points on why I think that AI is actually going to be really good for the world for the financial world and for trading, because it's going to do a lot of things, just like you said, a lot faster and a lot better. It's not going to tell us what's going to happen next in the market, but it is going to be able to take a look at our positions. It's going to be able to look at outlier risk. It's going to introduce, new types of underlyings and strategies to us that we can learn much faster. The list goes on and on, with respect to everything from tokenization all the way through to kind of traditional financial instruments. It's going to be a huge plus for the world of, trading and finance.
Yeah, it was a really good conversation. That's his Truth or Skepticism podcast. It's going on with 10 years with Dylan. And it was really good. It was a good listen. It got my mind going. I enjoyed it.
Good.
Tom, seriously, I honestly, I have to say, you're sharp, you're fast, you're the best deal maker. But when I threw in at the end all those years ago, and I just need to get to interview once a month for my audience, and you're like, done. I think that was the most valuable thing I did. So I felt like my positive drift, my mind racing was good. It was on par with yours. And I appreciate it every month, and I look forward to it. So thank you so much. And hit me up about Thursday.
Yeah, I will. All right. Thanks, everybody.
Bye, everyone. Thank you so much. Bye.
Thanks.